Hello friends, in this particular video we are going to talk about scalping for profits as a day trading strategy. So to start with, we are going to explain what is the scalping and how it's going to be useful for your short-term profit. So we are going to cover all the points. So let us start with the fact what is scalping. So typically, a day trading strategy that allows you to make profit on extremely small price movements is called scalping. That is, you enter and exit a stock within seconds or minutes for quick profit. So, this scalping process will make many trades and aim for smaller profits or needs. For example, let us take an example of yourself. You are interested in short-term profit and you are going to trade within a day many times. For example, if you have done trade many times within a day, then this is called scalping because you are interested in short-term profit with the way the stocks are in the market. So this way you are going to make short-term profit and you can make short-term profit many times within a day, which is called scalping. Now let us talk about what factors scalping considers. For example, whenever you are doing scalping, what are those factors that you need to consider? So the most important factor is bid ask spread because the scalping is all about achieving the profit. To achieve profit, scalpers look to take advantage of changes in the securities bid ask spread. We are going to explain you in more details in the next slide. You just take the note that this is one of the most important factor that scalper will always consider over here. So scalpers primarily use the market's price to make their trading decisions. A good scalper also uses technical indicators because if you are just going to rely on this bid ask spread and you just did not do any technical analysis or any consideration of any technical indicator, then it might create a problem for you. So a good scalper will always be careful with these extra precautions. Now we are going to explain you how scalping works and how it makes you profit. So this slide is very important for you. Okay, let us consider situation first. If the spread value between the bid and the ask price is wider than usual. So if this is the case, because bid and ask is having wider spread value, here you can see that people who want to buy will be more than the people who want to sell because the spread value is more, which means the bidder are more and the ask value is again more, and the spread value, if the value is clearly more, then it clearly indicates that more people wants to buy that stocks. So here our scalper will do complete opposite. For example, we already have the stocks of that particular company. So what this scalper is going to do is this scalper is going to take this signal as a sign to sell. So now you must be a little bit surprised why this scalper is doing opposite, because your focus is all about making short-term profit. And for example, if you see here, more people are looking to buy these stocks. If more people are looking to buy these stocks, now your scalper is doing a good deal if it is selling your stocks, because here you are going to make your profit because you have the demand of your stocks. Of course, the profit will be very less, but yes, that is the way this scalper works. Now, the second situation. which is just opposite to this situation. If the spread between the bid and the ask is narrower than usual. Now this is the situation where the bid value and the ask price is very narrow, and the spread value, that is difference between these two, is just too less. So here the situation becomes something like this. Here sellers slightly outnumbers the buyers. Now in this particular situation the sellers are more and the buyers are less. So the scalper is again doing the same kind of thing. Here scalper will take this sign as to buy. So here you see there are more sellers and your scalper is looking forward to buy. Now here you will have to take precautionary caution, because you will always need to consider your technical indicator as well. But scalper is doing it as a sign to buy, because scalper knows there are more sellers, and if you are going to buy as of now, you are going to make a good profit whenever the spread value will be more and you are going to sell just that time. So this is the way this scalper process works, and this is the way you are going to make small profit each time. Yes, this is not a very good amount that you are going to make, but this is clearly a profit that you are going to make within just short span of time. It might be that you are going to make a small profit within just 15 minutes. So this is the way scalper will help you to make small profits within a day, and you can do this process many times within a day as well. Now we are going to talk about one of example how this trading look likes. For example, the scalper has to work quickly to make, yes, this is the truth, that scalper will always have to work quickly to make many small trades, because there might be uh, there might be sudden fall or rise in the stock value. So you'll always have to move quickly, and you'll always have to act accordingly. So how the scalping example would be. For example, let us talk about Mr. Ram. He may buy uh, Indian rupees 210.25 rupees stock. So for example, per stock value is 210.25 rupees. So he is undergoing through this scalping process. He just found that he has just sold this stock within 220.50 rupees. So he has made a small profit over here. Now he has again bought this stock within 215 rupees 30 paisa, because again he is going to sell stock at a higher value. This is the way scalping works. This is the way he is making small profit. Like here, he has made a small profit over here, which is of almost 10 rupees. Now again, if you see this situation, here he has just made a small sort of investment, but again he is going to make a good profit if the value is something like this or more. So this is the way the process will just keep on going, and he is going to make profit. So again, the fact remains same, that he has to have a low trade cost structure. He is not going to make that big profit within this scalping process. But yes, he can make this. He can repeat this activity many times within a day, which can make him earn a good profit. Now coming to the last part of this video. So what are the results you can expect from this scalping process? So this is very important part, whether you should be quite optimized about this scalping process or how you should be thinking about this scalping process. Now we are going to cover both aspects, positive point as well as negative point. So Scalping can appear easy because a scalper might take an entire day's profit within a few minutes. Because you might be trading at that particular time when the whole scene has to take place. So you might be earning entire day's profit within just few minutes, and that makes you a very smart trader. But it happens with those only who are well experienced in scalping and doing it every day. And again, there has been a drawback as well. Scalping can be very difficult because there is very little room for error. In fact, there is no room for error. If you have just done the mistake, you are going to lose your money. So you always need to be careful while doing the scalping process. So we hope this video has been very useful for you because scalping for profit is always most of the day traders would like to do. So have a nice day.